Credit is an essential part of your financial life, and it can impact your ability to achieve your financial goals. With credit, you can borrow money to purchase big-ticket items like a car or a house. And while it's easy to think of credit as a burden, it can actually be a valuable tool for building wealth. Having a good credit score can make it easier to get approved for loans and credit cards, and it can also help you get better interest rates. A good credit score can even impact other areas of your life, like getting approved for an apartment or even a job. But building credit isn't always easy. It takes time and effort to establish a good credit score. That's why it's important to understand the factors that impact your credit score and to make responsible financial decisions that will help you build and maintain good credit. Knowing when your credit will be evaluated can give you a glimpse into how important it can be. Here are 5 areas where your credit might come into play. These include credit cards, mortgages and auto loans, insurance and utilities, housing applications, and job applications. A good credit score provides more options and eligibility for better rates and terms. In contrast, bad credit results in higher interest rates, deposits, or upfront payments. As mortgage rates continue to tick up, potential home buyers looking to reduce their monthly payments don't have too many avenues to save. But improving one credit score could make a difference, not only to get approved for a loan, but also to save money in the long term. For example, increasing one credit score by 20 points can save a borrower more than $20,000 in interest over the life of a 30-year conventional loan, while raising it by 100 points can mean a savings of more than $40,000, according to a new analysis by Credit Karma. Landlords and employers may also check credit as a part of their screening processes, which can impact the outcome. When applying for a lease to rent an apartment or a house, the landlord may also check the credit history to predict what kind of tenant someone may be. While imperfect credit score may not disqualify someone from renting or getting a job, it can affect their chances. Keeping track of credit reports is one way to ensure that potential landlords and employers are evaluating accurate information. Furthermore, credit-based insurance scores may affect how much individuals pay for an insurance policy, while utilities and cell phone providers may offer more favorable contract terms to those with good credit. Finally, credit checks may be a part of a background screening when applying for a job, particularly for those that involve finances or sensitive information. Companies are required to obtain written permission before running a check, but declining could disqualify someone from the job. In summary, credit impacts several areas of life, and it's essential to maintain good credit and monitor credit reports regularly to avoid potential negative consequences. Now let's talk about the differences between bad credit and no credit. Bad credit refers to a low credit score, usually below 580, and it can make it difficult to get approved for loans or credit cards. If you do get approved, you'll likely pay higher interest rates and fees. No credit, on the other hand, means you don't have a credit history. This can make it challenging to get approved for credit because lenders don't have any information to base their decision on. But it's not all bad news. No credit can be easier to fix than bad credit because you can start building your credit history from scratch. If you're starting from scratch, consider applying for a secured credit card or becoming an authorized user on someone else's credit card. I have pasted some links in the video description below for more information on secured credit cards. Overall, make sure to use credit responsibly and pay your bills on time to build a positive credit history. We hope you found this video helpful and gained a better understanding of why credit is important and the differences between bad credit and no credit. There are no quick fixes to improve credit. Remember, building good credit takes time, but it's worth the effort in the long run. Thanks for watching, and we'll see you in the next video.